Hi there, I'm Mark Anderson. I'm a mortgage banker with Paramount Bank. No matter where you are in the country, I'd love to help you with your mortgage transaction. Please call me or text me at the number below anytime to learn what I can do for you on your mortgage. On this subject, you've probably got three primary questions. What are closing costs? How much am I going to have to spend? And three, how do I make sure I'm not paying too much? Broadly speaking, closing costs are defined very simply as any fee you are required to pay in order to close your mortgage transaction. The process behind the scenes to get your mortgage from beginning to end, it's complicated and it involves a lot of different services. To start off with, the fee that you probably want to look at more than anything else are any service fees paid directly to the lender. You might see this referred to as an origination fee, underwriting fee, admin fee, processing fee, discount points. It's going to be very important when you get an estimate of fees from a lender. Just ask them to tell you, okay, out of all these fees, like what are the fees paid to you and what are the fees paid to everybody else? Because you're going to need to be able to determine what that lender is actually charging you. Beyond the lender fees, we get into appraisal. There's a credit report. There's a flood certification. We're required to make sure that your property is not in a flood zone. If it is in a flood zone, we then have to make sure that you get flood insurance. From there, we've got title insurance, title services. Depending on the state that you're in, you might have an attorney fee. Beyond that, we've got homeowners insurance. If you're buying a house, one of the things you're going to have to pay for at the closing is you have to pay the insurance premium forward. So whatever's due for the year, that's collected as part of your overall closing cost package. Related to homeowners insurance, you're also, if your loan carries an escrow account, which it may or may not, if it does carry an escrow account, you have to fund that new escrow account with an escrow deposit. And then finally, there's interest. Depending on the day of the month that you close, you've got to pay interest from the day that you close and fund until the end of that month. This is an area where I'm going to have to kind of get on my soapbox a little bit because I really have a lot of sympathy for the consumer. You know, if you're like me, you want to research the heck out of something before you get into it. And especially something as important as buying a house or refinancing. You want to go around, poke around, find information, get some answers in place before you make that call to a lender. Unfortunately, the reason I have sympathy is if you go Googling around for closing cost information, I got to be honest, the information you're going to get is very likely going to be very inaccurate. In almost every article that I pulled up just to kind of check in before making this video, there's almost always a reference to some sort of percentage range. You know, you'll see a reference to you can expect to pay between 3% and 5% of your purchase price in closing costs. I know that everybody wants a rule of thumb, some sort of general guidance to lean on, but unfortunately this notion that you can boil down closing costs to kind of a percentage range, I mean, it's just wrong. The actual amount that you are going to have to pay in closing costs depends on so many variables. The state you're located in, the type of property you're purchasing. Is it a single family residence? Is it a condo? Is it a multifamily property? There's so many little details that end up driving the amount that you're going to have to pay that it's really impossible for me or anybody else to come up with some sort of percentage range you can expect. Fact is, the only way to get a really good, close, accurate estimate of how much you're going to have to pay in closing costs, as much as you might not want to do it, you got to call a lender, especially if you are in that kind of exploratory stage. Maybe this is a project you're going to do next year, 2 years from now. You may be reluctant to pick up the phone and call a lender. I don't blame you. You don't want to trigger a bunch of automated emails. You don't want to be bothered incessantly with follow-ups, just checking in after our conversation. If you don't want any of that, but you want the information, just call me. I'm not going to bother you with that kind of stuff. I'll give you a clear, accurate estimate for what you can expect to pay in closing costs for your scenario. And I'll put it onto a nice little spreadsheet tool that I put together that actually functions also as a calculator. So you can throw in different sales prices, different tax amounts, and the form is going to auto-calculate closing costs and the monthly payment. Hello, Dinkerton. Could you tell these kind people watching this video to like and subscribe to my channel? It really helps this spread out to more people. Could you do that for me, buddy? Where I'd recommend starting here is focus on the lender fees. What complicates this is that the amount of fees a lender charges you can actually influence the rate that they offer. You can kind of play with either variable to affect the other. So one thing you can do as a consumer to make sure you're getting the best deal on lender fees is actually to ask each lender that you talk to give you 3 different interest rates. What you're likely to get is kind of the middle of the road rate, where they are charging kind of maybe their standard amount in closing costs. The rate just above that middle rate is going to likely carry what's called a lender credit. So in this case, the lender's actually earning more than the revenue that they need to make because you're going up in rate. Therefore, they're able to take the overage, so to speak, and apply that toward your closing costs to reduce them. Conversely, if you go to the rate just below the kind of middle option, what you're going to see there is that there's going to be some amount of additional fees paid in the form of what we refer to as discount points in order to get down to that interest rate. Beyond the lender fees, once you're into that category of third-party closing costs, there are a lot of fees in there that, they're just kind of be what they are. If you're buying a home in the city of, say, Chicago, Illinois, there's going to be transfer taxes that are paid to the city, to the county, to the state. Those are fees that really, they're not going to change. But a good example of a fee category that's a third-party fee not paid to the lender, where you can do some value shopping, is with title insurance. Now, it is extremely rare for consumers to actually shop around to find the best deal on title insurance. The average consumer is going to go with the title company that their realtor recommends. And candidly, I don't see anything necessarily wrong with this. A realtor is generally going to work with the title company that they know is reliable, trustworthy, they get the job done. But given the simple fact that in the vast majority of cases, you are going to be paying more in title fees than you pay to the lender, I think it's worth doing a little bit of shopping around. Overall, as is the case with really anything that you're going to go out there and buy, whether it's a product or a service, it's not always a good idea to go with the cheapest option. It may be the case that the cheapest title company on the block or the lender that's offering a cut rate service, it may be the case that those fee reductions come at the expense of good, reliable service. But fundamentally, if you want to make sure that you're not paying too much, you want to make sure that you're getting good value for money, ask questions. Talk to your loan officer, make sure you have a full understanding of what their fees are, what their estimates are for the various third-party fees. Talk to your realtor, ask questions. Are you required to pay them a commission for their services? Talk to the title company, maybe shop around a little bit, cross-compare. In a lot of cases, if you demonstrate to the various service providers that you're working with that you are a sophisticated consumer, you want to know what's going on, you have an interest in making sure that you're not overpaying, sometimes just by poking your head up, participating in the process, asking questions, sometimes that really is the best way to make sure that you're not overpaying. Once you have a firm idea of what you're going to pay in closing costs, I think it is very important to consider one strategy to reduce the amount of your out-of-pocket expenses on the day of closing. And that is to negotiate for your seller to cover some or all of your closing costs. One of my soapbox issues that if you've seen other videos, you've maybe heard this advice before, but I am a big believer in my clients preserving as much of their cash as they possibly can, because fundamentally owning a home comes with costs, expenses, things you're going to want/need, and candidly the line between want and need starts to blur when you get into a home. I've had a lot of people say, hey, I get it. Yeah, it would be nice, Mark, if the seller paid my closing costs, but why on earth would they do that if there's another offer where they're not going to have to pay the closing costs? What you've got to keep in mind is that what the seller really cares about at the end of the day is not whether they're paying some of your costs or not. They're concerned with their net bottom line. How much money are they walking away with in proceeds from the sale on the day of closing? To that end, let's say your closing costs are going to be about $6,000. And let's say you have a property in mind that's listed at $200,000. From the seller's point of view, there's really no major difference at all between a straight offer at $200,000 with no closing costs paid and offering $206,000 with that seller paying $6,000 in cost. There's going to be a very slight difference in the amount of commission that they pay to their realtor, but we're talking about just a percentage of that additional $6,000. So I strongly recommend that you talk to your realtor. You make it clear that your intention is to negotiate this, or maybe it's not. You may be in a situation where that's not really a big deal, and that's fine. But I see a lot of people leaving money on the table. A lot of folks that would have benefited from having an additional $5,000 or $8,000 lying around after they move in. All right, well, I hope that you found that overview on closing costs useful. Please do like the video. It helps this spread out to more people. Also, subscribe to my channel. I do a lot of longer format content where I go into much more detail on all kinds of subjects related to the mortgage and real estate process. Thank you so much for watching. I really appreciate it, and I hope to talk to you again soon.